Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you have joined us for the second day of our Precious Metals and Critical Minerals Conference. The next presentation of the day is from Galantas Gold. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for a one-on-one meeting by clicking Book a Meeting. At this point, I'm very pleased to welcome Mario Stefano, Chief Executive Officer and Director of Galantas Gold, which trades on the OTCID market under the symbol GALKF, and on the TSXV under the symbol GAL, and on the AIM under the symbol GAL. Welcome, Mario.
Well, thanks, Greg, and thanks for having us, and thank you to the OTC. So, I presented at this conference a number of times in the past, and the Galantas you're seeing today is quite different than the Galantas you've seen over the last few years. We've made a very clear pivot to Chile, and I'll try and explain to everyone why. We still have a very exciting project in Northern Ireland, but the market was a little difficult to raise capital, delays in getting some advance on drilling that made us decide to look for other projects that we deemed to be near-term producers with significant exploration upside. And we picked up two projects that exactly fit that criteria. The first one is Indiana, and the second one is Andacollo. And I'll go through both of those in detail for you and explain why we think Galantas is really the next gold producer that hopefully will catch the market by storm. Obviously, there's going to be quite a bit of forward-looking statements here. So, keep that in mind. Everything that I'm saying here, there's a lot of forward-looking statements in our sector, but I'm sure a lot of the investors that are listening on this are quite familiar with the gold sector and a lot of the risks that come with being part of the gold sector. But that being said, where are we? And what do we have here now at Andacollo and Indiana? So late last year, we announced a merger to acquire the Indiana project in Chile. They're both all in the Atacama portion region of Chile, so in the deserts. Indiana, I think, is a fantastic project. We came out with an updated resource, which I'll get in a little bit more detail later in the presentation. It's about 5 million tons at 2.25 grams per ton gold, 1.3% copper. In the olden days, that would be deemed, say, 600,000 ounces of gold at 6 grams, but the ratios have gone all out of whack. So as a result, I'm just giving you the gross numbers. We think that resource is going to increase because when we came out with the resource, we didn't get a chance to model in the halos around the main veins, and we think there's a lot more gold and copper around the main veins. Then secondly, in January 6th, we were presented with an opportunity to acquire another project in Chile called Andacollo. It's a former producing mine, a large-scale mine, had 7 million ounces in historical resources. 1 million, approximately, we think is heap leach oxides. 1 million is transitional ore, and 5 million are sulfides. And that's a pretty exciting project that, as I said, we were able to acquire and merge into Galantas. So everyone's aware, the stock has been halted on the TSX and the OTC. The reason for that is we need to submit to the TSX an updated 43-101, which we got a big team at site working on getting that completed. I'm hoping to have that to the TSX sometime in March. Once the TSX reviews that and clears it for publication, then the stock will be unhalted. And then the next step will be shareholder approval, which we think sometime in May we'll get the shareholder approval, and then off we go with the Andacollo project. But what makes Galantas quite unique, I think, now is we have multiple assets that are near-term producers. And that's really important. We're seeing record commodity prices, particularly in gold and silver. And, the ability to take advantage of the cash flow that we generated from getting these assets up and running and obviously contributing to the bottom line is going to be quite important for Galantas and our shareholders. And both these projects, Andacollo and Indiana, we think will be up and running this year. So I think, anyone who's looking at Galantas is no longer just looking at an exploration company, but a very, very near-term producer. In terms of our capital structure, this is going to be post-closing of the Andacollo transaction. We'll have about 570 million shares outstanding. Management own about 25%. Louis Catril, who is the vendor or basically the owner of the Andacollo project, is going to own 20% of Galantas. Melcourt, a family office, owns about 10%. Eric Sprott owns about 10%. He'll be 20% on a partially diluted basis. And Ocean Partners owns just under 10%. So we'll have about 570 million shares. That may sound like a lot, but it really isn't, because these two projects both require extraordinarily low CapEx. And I think as well, because we're going to be generating cash flow hopefully this year, which is what we're anticipating, we don't really see that share count now expanding. And a great example of a company that has very similar share count, a very similar project to Andacollo, is Rio 2. Rio 2 just went in production at the end of January. Heap leach project producing somewhere around 70 to 90,000 ounces per annum. They got a 1.8 billion Canadian market cap, so it's called a 1.4 billion US market cap. Galantas market cap on the closing on the TSX was about 100 million. On the AIM, which we trade very thinly, mind you, because it's just a different market than what you would see in TSX, we closed on a 35 cents Canadian range. So, we see lots of significant upside for the Galantas shares. So what makes Andacollo, and I'm going to start with Andacollo, quite interesting, is it is a former producer. It was in production back in the 90s by a company called Dayton Mining. Prior to that, was owned by Noranda, and I'm ex-Noranda. And most recently, it was owned by a company called Lackland Star. They were producing from 2010 to 2014. There's a significant amount of history on the project by Lackland Star, but unfortunately, as many mining companies were experiencing in that time period, metal prices were quite low. The grade of 0.5 grams at $1,100 gold was marginal, so they weren't generating a lot of free cash flow. So at the end of the day, what we have now is a whole different metal market. We've got $5,000 gold. It's crazy to think about it, but something that was producing gold at $1,100 an ounce and barely making money, now all of a sudden is seeing $3,000, $4,000 per ounce margins. So at current spot prices, so that to me is really going to put Andacollo and Galantas at a whole different level now with this project. It's at about 1,000-meter level, so it's not high in the mountains. It's right next to Teck's producing Carmen de Andacollo mine, which is a 35,000 ton per annum copper asset. I think last year, I'm just going to guess here, they probably generated 200 to 250, maybe even 300 million in EBITDA, we guess. But it's a significant cash flowing asset for Teck. We're right next door, right adjacent to the Teck asset, mind you. So what do we have here at Andacollo? We've got 2 million ounces. This is historical resources. So as I mentioned, we need to update this historical resource to 43101. But there's approximately 2 million ounces of gold in the measured and indicated category and 5 million ounces of gold in the inferred category. This is basically the exact same resource that Lackland Star had back in 2014. They just lowered the cutoff grade with the higher metal prices. But basically, this is potentially a monster that we have on our hands here. Historically, it produced just over 1 million ounces of gold. It was shut down in 2015 range, continued to produce some gold through the heap leach, and it was acquired out of bankruptcy by that gentleman, Louis Catril, who's now going to become a 20% shareholder of Galantas. At the peak, it produced about 135,000 ounces of gold. So a little bit of the history here, very quickly. this used to be an old Chevron asset. As I also mentioned, Noranda was involved with this. All the holes here, it's just under 200,000 meters of drill holes, but they're all vertical holes. So I think there's a real opportunity just by doing some angled holes to really understand where those feeder systems are, to get a good understanding how you can increase the overall grade here. It produced, as I said, over 1 million ounces of gold. We acquired this asset on January 6th, and we're now going through the process with the TSX for approval and final shareholder approval. I'm targeting sometime in May to get that approval. Let's go to the next slide. Oh, it doesn't want to switch. Oh, there we go. A little bit of a delay there. So this is a really important slide here. That area in blue is our land package. Those areas in bright red are where the 7 million ounces in resources, again, historical resources, are located. Tres Perlas, which is 3 pearls, is the main pit with a good chunk of the ounces. But that area shaded in light blue just to the south of that image of the red is Teck. So Teck's pit basically adjoins our pit. You got less than 100 meters between where the Tres Perlas pit would be and where the Teck pit is. So you can see there's some significant opportunities here between the two companies. What's interesting though, and there's a slide on this a little bit later, but Lachlan Star did quite a bit of drilling towards the end. Gold, as you know, in 2012, 13, 14 was a very difficult market for everyone. So they started drilling for some copper because Teck is a copper mine. And they were drilling some fantastic holes that really show that the copper extends to the northeast onto our land. So we, not only do we have significant amount of gold already identified at Andacollo, we think there's potential for quite a bit of copper. Don't know the tons, don't know how much is there, but we're pretty confident that there is an extension of the copper pit onto our ground at Andacollo. Here's a history of the production. As I mentioned, this thing produced 1.1 million ounces in total. Historically, those areas there where you see the low ounces, that's because, again, low metal prices, Dayton mining, and then Lachlan Star stopped putting ore on the heap leach pads. Production would have declined because you're not refeeding the pads. But again, today, this is a fully permitted mine. We are going to need an extension to the old operating permit, which is a much more simplistic process. We're just going to reinstate the permits. It's probably a 4-month process, 4.5-month process to get that completed. And then we think we should be in a position to get this up and running again and producing gold. Total CapEx, again, we got to take this because we don't have a PA, but we're targeting no more than 90 million. We think we can do much better than that. Really what we need to do here to get this back up and running is refurbish the plant, get some mining equipment, obviously, because you can't mine without mining equipment. We got to get a crusher here because the crusher was removed when it went into bankruptcy. So we need to find a 15 to 25,000 ton per annum crusher, ideally 20,000 tons plus, and then we can get this up and running. So a lot of those items for a crusher are low lead time items. We think, once this thing starts trading and get approved by shareholders, we should be in a position to, very quickly ramp up production here. Again, this is heap leachable. There's about 1 million ounces of resources that are oxides that could be leached. There's about 1 million ounces in transition that could be leached. And then the sulfides, which have copper, we would have to figure out what's the best way to recover the gold and copper from those. And it might require what they call a SART plant, which sort of separates the gold and the copper. Or, of course, there's an interesting asset right adjacent to us called Teck that has a significant mill and flotation circuit, meters, hundreds of meters away from us, which is really a significant opportunity for all of us. Here you can sort of see the pit that was previously mined. You can see those structures, how they're vertical. We need to get some nice angled drill holes here to really understand what the potential is here for this mineralization. To give you an idea how shallow the mining here has been for those 1 million ounces. The Tres Perlas pit, which is the main resource area, and the other areas still need to be defined and grow. That's only been mined to about 100 meters. The deepest drill hole here is about 250 meter depth. Teck is currently down to drilling 600 meters. They got mineralization, so we're pretty confident. As we drill deeper here, we're going to continue to find these stacked mantos. We're targeting, from a production perspective, 20 to 30,000 ounces of gold for this year. Now that's going to be dependent on quickly getting the permit and getting ourselves up and running. We think we can get some gold recovered from the old dumps. There could be 200 to 300,000 ounces of gold sitting in there, so that's going to be part of our production there. It's just breaking up the leach pads and rewashing it, putting it back in solution, and trying to recover the gold. You don't need a crusher for that. We're just going to have to use machinery to break up the rock and get it washed. And then once we're up and running with the crusher, we think we can produce 60 to 80,000 ounces. Annually, we'll target somewhere between 70 to 90,000 ounces a year from the oxides. And then obviously longer term or medium term, we'll think about how we expand this to start incorporating the transitional and the 5 million ounces of sulfides into a mine plan here. But the key thing here is this is a quick, low CapEx project to get ourselves up and running, generate some significant cash flow in these markets. So in terms of our restart plan for Andacollo, I touched upon a lot of this already, but the key here is getting this plant refurbished. I think it might be somewhere in that $10 million range. And that really is to produce the doré bars. Chevron and Dayton, actually it was Bechtel that constructed the facilities here. That was designed for 200,000 ounces of gold per annum here. So to give you an idea, there's lots of infrastructure here to get this up and running. We're in the desert of Chile, and obviously one of the biggest questions for any mining company in Chile in the desert is, do you have water? And yes, we have 25 liters per second of water. That is more than sufficient for our current plans of 70 to 90,000 ounces per annum. We have access to get additional water up to another 100 liters per second. The original mine here had 100 liters per second of water access. The owner, Luis Catrell, decided to sell some of it to fund his acquisition of this asset back in 2019. But he kept enough water for the mine plan. So we think we can re-access that water. In fact, we're really confident we can re-access that water in the future once we decide to expand this. I've already touched upon those resources. So I'm going to go to the next slide, because as I said, I think there's real potential here to really expand those resources. And you can see where the leach pads are. There's 4 kilometers of strike here and 2 kilometers of wide of mineralization. This hasn't really been drilled since 2013 when Lackland Star, 2014 when Lackland Star was drilling some holes here. And again, as I said, this was shut down. So there wasn't a lot of exploration done here. We think there's significant potential for this mineralization to extend to depth. There's real potential here that this is somehow porphyry related, because right next door to us obviously is a porphyry. We're not yet sure what the geology is here. Is it porphyry related? Is this distal? Then there was some sort of faulting that brought it near the porphyry. We're now starting to think there's real potential that this is actually porphyry related. So as we drill deeper, you might even get to see some much more continuous mineralization, which is hard to think of, and we already have 7 million ounces of gold here. But these are one of those rare opportunities that I don't know what the limit of the gold and copper mineralization is on this property based on what we've been seeing and what's been done here historically. This has been around for quite some time. This was the original gold mining district of Chile, or one of the first gold mining districts of Chile, but has never really seen significant amount of exploration other than this key asset here. And we think, as we start getting some drill bits here, drilling this deeper, angled holes, understanding what's sitting below this, is it porphyry? There could potentially be a lot more than 7 million ounces of gold here. Keep in mind, I just want to reiterate that 7 million ounces is historical. It was done by Lackland Star, then another company reduced the cutoff grade. We haven't done our own resource, so there might be some pit constraints off of that, but nonetheless, there is a lot of gold sitting on this property in this environment. So to give you an idea on what the exploration upside here is, I'm going to go first on the gold. And so one of the targets that were being drilled near TSXV, you can sort of see some of the wide zones of mineralization that they started to hit at Lackland Star back in 2012. They hit 175 meters of 0.9 grams, 130 meters of 0.85 grams gold, and 99 meters of just under 1.5 grams gold. So that's quite significant wide zones of mineralization. And we think these are stacked mantles. So they're flat lying, dipping to the east, and they may all dip to the east. So we're pretty keen to start drilling some deep holes here to really understand what is happening. Then you start to wonder, all right, you're next to a big, massive copper mine. So what do you do here on the copper? Is this just gold or is there copper here? Well, we think there's actually quite a bit of copper here. We think there's going to be a rich chalcocite blanket because you have oxide gold, and the copper would have been there as well. So it likely precipitated at some level. Maybe it's 100 meters, 200 meters, 300 meters below surface. But we really think there's going to be a really rich copper zone here somewhere. But Lackland Star did drill some holes to try and see what's between the gold pit and the copper pit. And they drilled holes like 30 meters of 0.5 copper, 30 meters of 0.48, and 10 meters of 0.37. And then we just found through a news release, Proactive, where they also mentioned they drilled 30 meters of 1.8% copper. And this is all next to Teck's open pit copper mine. So to give you an idea, when I was sort of alluding to that they're really right next to each other, well, that pit on the bottom here is Teck. You can sort of see a little bit of a wall here. It's a retaining wall. And the other one is the Tres Pilas pit. So as I said, you're almost 100 meters apart, less. So really this is really one big massive asset here. That's our view. I'm sure at some point Teck will come with the same view, that this is one of those unique opportunities here that we were able to acquire Andacollo. Now, I want to really quickly, because I don't think I'm going to be doing justice to shareholders if I don't quickly talk about Indiana. So I'm going to jump ahead to the Indiana project, because this is really why we were able to raise our initial funds of $15 million. And I know I got a couple of minutes because I want to open up the floor to questions in the next couple of minutes. But Indiana, I think this is a fantastic project. This was exactly what I was looking for Galantas. We were looking for near-term producer, low capex, with significant exploration upside. And also we got that with Andacollo, but we also got that with Indiana. This is going to be an underground mine, at least initially. I don't think you can dismiss potential for open pit at Indiana as well as we continue to drill. But Indiana is in Copiapo, again, 1,000-meter elevation. We're close to infrastructure, airports, power, towns. Everything you need is at Indiana. And as I mentioned, we've already got a significant resource here that we think is going to continue to grow. We see significant opportunity here as we get on the ground to start drilling a number of additional veins that have been identified from surface. And these type of IOCG kind of related systems in Chile, what you see on surface, you probably got another 3 to 5 veins below surface that are buried. So this will probably cost $10 million US to get into production. We raised about $10 million US just recently. You can see all the adits that were put in place here historically. We were lucky enough to pick up this project for the exact same price that it was sold for back in 2020, which is about $15 million US payable over 5 years. And we really lucked out on this one as well. Also, we got a much higher metal price environment than we did when we locked this up in August. But you can see 2 of the veins here, Flor de Espino and Bonadosa. We hope to start drilling these in the near future to show that these veins continue to extend to depth. And maybe there's something special going on here on the intersection of these high-grade veins because it's never been tested. So we'll start putting our plans together on drilling this in the coming months. And hopefully we'll be in a position to announce in the coming months when we plan to, actually get the drills turning. So pay attention to that because we'll be able to notify the market on that. I'm going to go to one other image because I only got 1 minute. 1 sec. This is a little bit slow. All right, here we go. This is probably the most important slide on Indiana. See those areas in red? That is the current resource. That's about 5 million tons down to about 300 meters of depth. And some of it is above surface, some of it is below surface, but total 300 meters. That's about 6 veins, 5-6 veins to come up with that resource. All those areas in yellow is areas identified with mineralization. We've now identified 26 veins. There's an additional 21 veins that have not been drill tested. And since then, we've now found another 3 or 4 veins. And those are mineralized from what we can tell, have not been drill tested. So I think real potential here is another multi-million ounce deposit. So you've now got 2 near-term, large-scale deposits within Galantas. So I got 3 minutes. So I'm going to open up the floor to some questions here. So I'm going to read out some questions. What do you think of Marcus? All right. So I think I addressed a lot about how Galantas has changed from Northern Ireland into Chile. The market has not really seen their share price because there's very little volume on the AIM. We did hit, once we announced Andacollo, I think 50 pence, which puts us at $1 Canadian when there was some volume. So, we closed at 23 cents when we got halted. We haven't traded since on Canada. If we're trading anywhere near Rio 2, and I can't project what the market's going to do, but if, we see the exact same asset, maybe better than what Rio 2 has, they're at 1.8 billion Canadian. That puts us at a $3 stock range to just give you an idea of what could potentially happen here once we're producing. Someone asked, have we ever been in charge of producing assets? Definitely. Myself, including the team that we have, like Robert Sedgemore, we've all been with producing assets. Actually, that's been our history. I brought an exploration asset in Australia from exploration to commercial production. I was also CFO of Lakeshore Gold. That went from exploration to commercial production. So I've always been around producing assets and development assets. Being in true exploration, it's somewhat newer to me, but I'm back to my old roots, which is development and production. Okay. So, what does a success, someone's asking, what does success look like in 5 years? That's a fantastic question. I think in 5 years, and this again is before looking, I can see Andacollo being doubled, if maybe not tripled, maybe quadrupled, going from 20,000 tons per day to 80,000 tons per day. That's exactly what Rio 2 is looking at doing. You're going to have to get permits in place, obviously. But, in that scenario, you're producing between 3 to 350,000 ounces of gold at Andacollo. At Indiana, you're probably somewhat capped at around 1,500 tons per day, just underground mining. I'm sure people can see you can do a lot bigger than that. Just my experience, 1,500 tons per day. So at Andacollo, Indiana, you're probably then looking at around 80,000 ounces per annum. So basically combined, you're looking at 400,000 ounces plus. And that puts you in an extraordinarily special company. I'll give you a good example of that. I actually helped and advise Discovery Silver when they were looking to acquire Newmont's asset in Timmins called Porcupine. They acquired that early last year in April. It got closed, I believe. They went from nothing to 200,000 ounce producer. They got a fantastic deal on that asset, obviously. But right now they're a $9 billion company producing 250,000 ounces plus a year, to give you an idea. That's how quickly, when you're in production and generating cash flow, the market starts to value these kind of assets. So I think anyone who's invested in Galantas currently or, starts picking up some shares could be very well rewarded in the future. So someone's asking, Nick, how do I plan to raise financing without equity? Well, these are near-term producers. There is no royalty on Andacollo or stream other than a very small silver stream, which is a very small minor portion of the metal. I think, my background is finance. I think there's a very unique opportunity here to actually raise funds without doing equity, because I think this is the kind of project you could actually do that with. And it might be as simple as a nice, 25 or maybe even 30,000 ounces. I really don't care. I got 7 million ounces. Maybe I do a 4-year forward sale and bring in the capital now. And I think that really gets us up and running without equity dilution. And, anyone who then wants exposure, the only way you're going to get exposure to Galantas is through the market. And that is exactly what I'm trying to do here is going forward. I'm going to minimize any equity issuance and try and do this with forward sales. Let's see. I think I might have time for one more. No, I think I'm done. All right. Thank you, everyone. I really appreciate it.